Happy Monday, traders. It's 7:52 a.m. Chicago time on Monday, the 21st of March, 2022. This is episode number 2195. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is in a neutral position currently. The S&P is trading basically around the settlement from Friday. We're seeing this across the board. Crude has taken a strong bid, holding 107, the 107 handle. It has basically had an open drive from the open last night and has continuously pushed up as news that the EU is considering an embargo on Russian crude, just like the U.S. did. The European Union, of course, has a lot more risk making such a move, as they're more dependent on Russian oil than the United States is. The United States has already cut off imports of Russian oil. There are headlines throughout the weekend about Ukraine, Russia. Mariupol appears to be falling to Russian control, and after all, this looks like just a way of for Putin to add more territory to Russia. So that's continuing. There are moves by NATO being made. Looks like POTUS is heading to Poland to be a part of a conversation within NATO. The other thing is the yield inversion continues. We see a yield curve inversion in the U.S. Treasuries as well as euro dollar, the euro dollars, and it's telling us the market is pricing risk in the short term. This is what this looks like. The market is demanding higher yield in the short end of the curve, causing what is a bit of a deformed yield curve currently. It shoots straight up from the short end and then starts to slide slightly downwards as we go out in time, and that's not normal. So there's a lot of content on this, namely Jeff Snyder's Eurodollar University and Macro Voices, many others, and it's just we're going through something that's somewhat historic. I would suggest you look at that and pay attention. I don't necessarily buy that the inversion automatically means a recession follows, 9 to 12 months later, but they always say this time it's different, but we'll see we'll see how things play out. Today the calendar's quite light. We had PPI out of Germany month on month. Feb came in actually pretty decent at 1.4% versus 1.7. ECB's President Lagarde spoke this morning. Fed's Bostic spoke this morning, and then we have Fed's Chair Powell. Is the time right? Uh, I feel like the time change has played with this calendar a little bit. Is Powell speaking at 12 Eastern or 11 Eastern? I got to check on that. RBA Governor Lowe speaks tonight. The timing may be in question on this pre-market summary sheet. Just a caution. As far as earnings, Nike reports after the market. The S&P currently balanced, completely balanced profile. Yeah, I think the time difference has caused the calendar to be off here. That needs to be fixed. The S&P 158,000 contracts traded so far in a balanced profile with 50%, 56% of the inventory short. The point of control at 44.49, 32 and a half points of range. This is starting to come into what is expected, what is normally expected in terms of range. We're above the POC for range, which is 16 and a quarter. Need to check that. Doesn't look right. Should be about 23. But in any case, where the range is starting to come in a little bit as a part of this rally. And so that's what's on deck. There's a bid going under Bitcoin. It is actually outperforming Ether currently since this pullback from a couple months ago. There's definitely a bid under Bitcoin currently. It has pushed again above the 40,000 mark and is holding steady. It is off a little bit today, but overall it's been performing better than Ether. If you plot the Bitcoin Ether spread, you'll see that they've been consolidating and Bitcoin is breaking out, showing strength versus ETH. So that's where we stand in terms. Oh, one more thing. Looking at what we talked about on Friday, real quick. We talked about the fact that we closed at highs, and we closed with quite a bit of strength. There was the auction was interrupted by the close, and that's Thursday's close. And there was a weak high going into Thursday's close as well. By the time we opened, the market had pulled back. The market had pulled back, and I talked about the potential for this thing to pull back to the 34, which is the key point of control, or to push to 5150. So if it continues higher as it has been, now this is a pretty decent rally here. Last week, the S&P climbed about 5 to 5.5%. I don't remember what the number was. It's 5+%. That is tremendous in 4 days. That's a lot. So this is a pretty impulsive rally here. We had talked about this before it happened. We talked about these higher lows the market's been forming, and the fact that if it breaks through an area, the upper end of balance at 42.70 or so, then we are likely to test a 44.05, 44.0550, and we ended up doing that on Thursday. Friday, it ended up pushing even higher. So let's look at the review segment. The review segment, let's take a look at what it did on Friday. Here's Friday open auction, an open auction in range. You can see that this profile from Thursday was quite poor. We have a point of control at the upper end of the range, and we have a key low volume node right down here at 75.50. 75.50 with the point of control, the overnight point of control at 75 even. So it looked. There's an echo. Strange that it's the same mic issue because I'm actually starting from home today versus, let me try this again, 1 second. Is that any better? No, there's something going on with this last update of the broadcast software. So there's something going on with this latest update. They've messed around with the microphone settings. Unfortunately, there's not much I can do about it during the broadcast. 1 second. Here's a last ditch effort. I need to keep moving here as I need to go and take my kids to school. Yeah, these microphones are nowhere near cheap. It's like $300 for a set. Anyway, so what we did is we had an open auction. As long as we held above the 75, we had the overnight mid and the overnight VWAP to tackle. We had the over-under line at that point. Let me see if it was in this. We had the over-under line, and as long as it took the over-under line, we're looking for a pullback to get long, and that presented itself in this mess here. This was a tough hold, and then we had the continuation up to 51. 51 is right here. We're looking at the point of control from Friday at 44.50.75. So the market ended up accepting and trading the heck out of that 44.51. Again, the point of control 44.50.75 for Friday and resting there. Does this look complete to you in terms of auctions? Those of you who watch auctions, does this look complete in terms of an auction? Does this look like the market has found its sellers here? Has it done its job? Positively not. This was basically, it turned out to be somewhat of a trend day profile. It's a triple distribution profile trend. And it essentially the only reason buyers did not go higher is because the time had run out. And what that does is it creates pressure depending on what happens. We're closed. We're closed between Friday at 4 p.m. Chicago time until 5 p.m. Sunday. A lot can go on, but in general, we see that high get taken immediately on the reopen in the overnight session. In this case, it got taken immediately after the cash close, before the futures close. Already, it auctioned higher. It ended up pushing higher, and then we come in, and the overnight session, in fact, confirms that, goes to 44.63 and a quarter, and then we pull back to the bottom of this, to the top of this consolidation, the bottom of this sprint up. If I turn on the master levels, you'll see that there's some single prints right here. You see that marking 44, 35, 75. Those are single prints from Friday. Let's pull that up for a minute. So that's right here. That's the single prints from Friday. So this is the point of a unidirectional or one directional price discovery, a pretty aggressive price discovery. And essentially what we did in the overnight session is we pulled back to it and through it, and checked it before bouncing back up. So we came back to the 30. The single prints are up here at 35.75. So we pulled back into a decent support, a decent immediate support zipper that you see there, and it's bouncing back up, and we're above VWAP mid and the point of control. We're opening against the Friday's point of control. We're opening above the VWAP mid, but they're all compressed in this 47 to 49 area against the 51 MC point of control. This is a recipe for what? Yes, and we do have the 200 moving average coming down like this in this area. So what do we have? We're against the prior week's settlement high. We're against the Friday's point of control. We have the overnight point of control here. We have a VWAP in mid. This is just a recipe for consolidation. For there's a lot of compression that's likely to happen here. There's a lot going on in this area, but overall the trend is your friend, and it's likely to continue higher. This is a key area that we're in here, the 44.51. So I'm not surprised that it's resting here, and so it could form a nice consolidation before it breaks higher. If participants still see this as cheap, it's hard to tell what's what, but given Friday's close, it is hard to imagine that it would not continue to push and at least take out the prior week's high at 44.57 at this point. So I have 2 minutes left. Let's take, I was going to go through the overview. I'm not going to do too much of that, but you can see that we are leaving the monthly VWAPs behind. Okay, we have a couple more weeks. We have a week and a half for this month. Look at the gap between the VWAP and the bonds, the current bond futures in 10 years. And crude is actually pushing into its monthly VWAP from below, expecting it to find resistance here at the 108, with nat gas holding steadily above its VWAP for geopolitical reasons. So here's what we've got for today. So for today, we have several things that I'd like you to take notice of. I'm not going to do the scenarios, but I want to point out what's important. What's important is this magnet right here. We have a magnet at 44.10. This is the 10 right here. We have the magnet of 44.10. We have a high volume node right here at 51. We have the over-under line at 94. As long as it stays above 94, we are likely to continue higher, and we've done a pretty decent job of doing that. So let me turn these cloud levels a little bit higher, make them a little bit louder. But you can see a whole bunch of lines here, and there's a lot going on here. So the expectation, the key expectation this morning is an open auction that attempts to pull back a little bit, and I'm expecting it to take out the overnight high at 63 and a quarter, expecting it to now start to squeeze towards the key resistance, which I have at 4,500 or 40. The key resistance is at 44.98, something like that. I'm expecting the market to kind of chop its way over. Is it going to make it today? Don't know. I'm expecting this day to be relatively muted in terms of action. Okay, so that's what I'm looking for scenario one. Scenario two really is a push, poke the high, come back, consolidate in the middle, lull everyone to sleep, and then start to move towards the magnet here at 44.10. So we're back to 10 for a magnet test right in here. Okay, this is what's expected for today. This is the map. This is the plan. Go trade it when the market shows up at your areas of interest. Whatever your map is, that's where we trade. You notice my turns are occurring at the lines that are prescribed. I don't trade. I don't diddle in the middle, and I don't trade for whatever purpose. There has to be a good basis for the trade before it's taken. Good luck. I'll catch you tomorrow morning at a regular time. Take care.